Hey, welcome back, everybody, to the Thrive Co-Living Communities YouTube podcast. Always a mouthful, and I have to work on it every time. Glad to have you back. And as you probably have gathered by now, we've sort of moved from talking about the different aspects of Thrive to something that we will do when we actually have our first community, and that's to bring in people who are interested in different things, passionate about their item, and some people for some people it will be work related, for some people not. I'm going to let Paula Kaeser introduce herself as far as her work background, but her passion at the moment, and a lot of us have one for a while and then we'll dig into something else if we have really creative and inquisitive minds, and she does. Um, but right now is cryptocurrency, blockchain, and Bitcoin. So for a lot of us, I feel like we have some sense of what it is. We know it's growing, we know it's big, but it's a pretty complex subject. And I was intending to do a lot of in-depth research for this podcast, but I decided very conveniently that it would be better for me to approach it from just a very basic layperson's knowledge and to let Paula explain it. Um, so I let myself off the hook, and I'll ask things, probably the same types of things that you would if you were in the podcast. So Paula, welcome, and I've really been looking forward to having you on the podcast.
Well, thank you, Mark. So I believe you've asked me to introduce myself a little here. I am Paula Kaeser, proprietor of two businesses. I own an insurance agency. It's a captive property and casualty insurance agency. I'm contracted with Shelter Insurance Company in Columbia, Missouri. I operate the agency in and around the Louisville, Kentucky area. My second business is a consulting practice. I work with others or companies actually, consulting them on reducing expenses for their businesses, all the costs of the products and services that they have to consume in order to conduct business on a regular basis. So pretty busy lady, however, I like it that way. And you did nail it on the head with the adage that I'm exploring a passion of mine. I didn't even know it was a passion of mine until maybe a year ago. The onset of the COVID-19 crisis in our country and around the world kind of drove this home for me, and that's really when I took a great interest in Bitcoin and cryptocurrencies and started to dig in. I'm sure you'll have some questions about that, but I appreciate the offer to come and speak today.
Great. And maybe start with what in your background led to this interest and passion in Bitcoin.
Yeah, I'm not sure if it was in my background or not. I will say that I remember a time maybe between 2013, 14, when I very first heard about Bitcoin. People will probably learn or realize that Bitcoin was invented, if you want to use that term, 2008, 2009 timeframe. I didn't hear about it until around 13, 14. Didn't really take a big interest in it at the time. But in that period in my life, I was actively day trading stock options, which had me looking at a number of different investment type tools. And so it came to the surface, but at that time, I just wasn't interested enough to explore.
Okay, so um, where do you think we should start? Should we start with monetary policy and money and gold and the root of currency? Where should we start?
Yeah, so it's always helpful to me to think about defining what is money, and that's where a lot of the people that I've learned from start down the road with this discussion. So when you consider what is money, a number of people would come up with a number of different definitions, but to me, it kind of helps to think about money in terms of four different properties that a money might have. You know, everybody's mind goes to um, tribes of Indians that used to use shells as money or stones or pelts or something that had value. Um, to me, you know, money has to contain these four things. One is a durability. So it has to be something that will last. It has to be transferable. So you have to be able to exchange it between one person and another. Um, Divisibility is another property of money. You know, it has to be able to break down into small portions and, you know, put a bunch of small portions together to equal big portions, right? So divisibility is one of those things. And then the fourth thing is scarcity. You know, an abundance of something doesn't really hold an intrinsic value. So there has to be at least some limitation to the amount that you have in order for it to hold a value. And you know, I think most people agree that that is properties and can define what people use as money.
Okay, so water could not be money unless we get down to a scarce supply.
Well, true. I mean, I guess, you know, if it was extremely scarce, we might be bartering with water. I mean, that could happen, I guess. But you know, water is not very. I mean, it is divisible, but it's not really doesn't transport very well. You know, it's quite heavy, you know, all those things. But you know, over the millennia, decades and decades and hundreds of years, people have used money all sorts of different types.
So take us from the time that money was, I guess, national or sometimes local
Mhm.
to um, backed by gold. When did that happen? Unless there's something before then that we need to talk about.
Yeah, so you know, governments in the historical view typically backed their currency by a hard asset, you know, something that had the properties that I just talked about. And, you know, wars were fought over gold, right? And the US actually was founded on a gold standard, the US dollar, in the 1970s. Actually, I believe it was August of 1971. There was legislation introduced to remove the gold standard or the backing of our currency. Um, Central banks were formed and they took over monetary policy for the US. However, you know, I'm not a historical expert by any means. Uh, Central banks are not actually departments of the United States government. They are independent banks, but they do, um, I guess, hold the reins as far as monetary policy for the US dollar. So it's a little bit of a skiff. It's like a place that people maybe don't realize that our government is not the holder of our currency. A group of private investment banks is actually the holder of our currency.
So up until 72, um, gold was the currency was backed by gold, dollar for dollar? Was it mandated?
I believe so. I believe so.
Okay. It seems like I heard, because I have been studying this,
Mhm.
actually based on your prodding and recommendation, but it seems like something big happened around World War II or the end of World War II. Didn't we begin to dominate, hold a lot of gold? What happened around that time? Do you?
I, I, I I wish I could give you details about that, but I really can't. I don't
Okay,
know.
no
Yep.
worries.
You tell me though. What did you understand? What do you understand happened during that time?
It seems like we sheltered a lot of gold during the war from Western Europe, and I think we may have confiscated a lot of gold from Germany. I don't remember hearing it about. So, and it seems like we sort of cornered the market, and maybe it had to do with um, also most currencies being backed or being based on the U.S. dollar um, as a uh, as a reference point. But again,
Yeah.
uh,
So I have heard, and I have some sources I've heard it multiple times, that the US dollar really became the world reserve currency with the onset of the central banks and the decoupling with the gold standard in 1971. And I've also heard that the US dollar turns 50 years old, even though I know the US dollar has been around a lot longer than 50 years, because 1971 was when this major transformation, this major shift took place. As the US dollar being the world reserve currency turns 50 in August of this year.
okay. So I think you said at the beginning that moving away from the gold standard had some impact and was not necessarily good. Just take us, and I think that part of this is related to Bitcoin. So just
Yeah,
take us on further.
sure, sure. Maybe someone or people have heard the term fiat currency. Yeah. So fiat currency is a currency that isn't backed by a hard asset. It and most of the central bank currencies in the world today are exactly that. They're basically they're made up, like they're not tied to something real in behind. Now, that gets us all into a discussion over bond markets and like um, debt and there's you can go down a number of different rabbit holes, but I think to speak to your question is that like when you have an asset that can be manipulated in a way or just wildly printed by irresponsible government officials, you know there's nothing to hold it to its value. So we end up with a currency that doesn't have the properties that I spoke of in the beginning, when it can be randomly, generated in economic stimulus and disguised or worded as quantitative easing and things like this. It really works to debase a currency that's in place and not hold a value like it should when it's tied to a hard asset.
And is that what leads to runaway inflation like Brazil and some other Central American countries that
Yeah.
just print money and the value continues to go down? There's no trust. And then I guess that affects investment because there's not trust in the currency or the country.
Yeah. I love that you use that word trust. Um, a money must have, or an exchange of value must have this intrinsic trust built into it. And yeah, when you can't trust the currency that you have to hold its value, then an economy could just collapse like a house of cards. And we've seen that over and over again in countries all around the world. It's not just South and Central American countries, but African countries and really any third world country, because if a government doesn't have the trust of its people and the trust of the other nations in what's backing the currency, then it's just a recipe for disaster, really.
Okay. So are there other conditions related to currency, backing of currency, that led us to this point where people said, hey, this may be the answer? Or what are the other problems that have led us to this point that people are seriously looking at this option?
You mean Bitcoin as a replacement for the US dollar or other fiat currencies around the world?
Mm-hmm.
Yeah. I think that just the manipulation that takes place is probably one of the biggest things. That kind of gets us into the discussion of, well, what is Bitcoin? Like if there's people listening to this discussion that don't have any idea what Bitcoin is, then it's going to be hard to explain, why Bitcoin offers a solution. So, maybe we can spend some time just kind of defining what Bitcoin is. So Bitcoin is really a technology, if you think about it that way. It has some intrinsic properties as well, similar to like we talked about for money, dollars. Bitcoin is based on a blockchain, and a blockchain is actually a program. It's like code, okay? It is similar, but different than our current internet that we use, that we've all become accustomed to, at least in the modern world. And its properties include being decentralized. Another word for decentralized might be distributed. It is a ledger, so it's a recording of data. So blockchain is a decentralized ledger, and Bitcoin is actually built on top of the Bitcoin blockchain, and it's really sort of a reward that people earn from sourcing or proofing the code, the transactions that take place on top of the blockchain. So I know that probably muddied the waters for most people, but if you have some questions, I'd love to clarify or know how to kind of talk that out.
So Bitcoin is a type of blockchain.
Yes.
Why don't you explain this ledger a little bit? What would we see in this ledger, and can we see it? Is it transparent to everyone, just to certain people? How,
Yeah.
and can you show it to us? I'm putting you on the spot, but can you log into the blockchain, to the Bitcoin and the blockchain, or a blockchain? How do we see it? How do we know
Yeah.
it exists?
Yeah, so I think there are ways to do that. I have never done it, so I don't think that I'd be capable of doing it while we're having this discussion right here. There are people who can. But blockchain is like this peer-to-peer network. So, like anyone can participate in it, and it is open source, but it is more secure than our current network. So that's kind of like this thing that I've always kind of had, tried to wrap my brain around. It's secure than the regular internet that we use, but it's open source and people can look at the code anytime they want, even though I can't because I don't know how. But that being said, like Help me, Mark.
So
Like,
are we introducing the element of trust then?
yeah.
Do you buy Bitcoin because you trust this process?
Oh, yeah, absolutely. I do trust this process. And, the things that Bitcoin, well, let's go back to the start of Bitcoin, okay?
Okay.
If we, yeah. Bitcoin was introduced late in 2008. So we go back to the kind of the crisis that happened in 2008, 2009, the housing market crash, and everything that happened with banks defaulted, the default of the banks and the overextension of credit that they had participated in fully, and then the subsequent bailout of the banks after that. So really, Bitcoin was established during that time period by a person or perhaps a group of individuals known as Satoshi Nakamoto. And I'm sure you've heard that. Satoshi
Say it again.
Nakamoto. Satoshi Nakamoto.
Okay.
Okay. So white paper was written, I believe, in around October 2008. Satoshi published his white paper talking about a peer-to-peer monetary system that he thought was going to solve the problem of the central banks and the runaway credit, that overextension and everything that just happened. The code was launched in January of 2019. It was like the Genesis block of Bitcoin, right? The Bitcoin network. So, since then, Bitcoin has kind of morphed and just, seen this enormous explosion. So back then, Bitcoin is just touch and go, whether it was going to be something worthwhile or not worthwhile, or whether it was going to make it or not. Believe it or not, back into the 80s and 90s, there were e-cash systems, that were coming on board. And really, I mean, what I've heard and what my research has showed is that the founders, Satoshi, kind of took the good points of some of the earlier projects and combined them into one, and finally settled on a system that he thought would eventually become what it is and now has become. Okay. You have a question now? Do you have anything after?
No, go ahead.
Yeah, so today, the Bitcoin as a monetary store of value, and all the Bitcoin that's been issued up to this point in time, is about $1 trillion, actually just over $1 trillion. So it's worth like the GDP of several countries, so it is a growing network. It has been active since 2009, so about 12 years in. There's a like fixed supply of Bitcoin. That's something that people maybe do or don't realize, but in the end, I think that there will be about 21 million Bitcoin total. And they expect that all the Bitcoin will be mined by the year 2140. Okay. Bitcoin can be divisible down to 100 million units of Bitcoin. One Bitcoin can be divisible into 100 million units, basically. So it does have really small or minute points of value, I think, when you consider. And today, I think the value of one Bitcoin is somewhere, it's gone up and down. The highest value has been about 64,000 per Bitcoin. and today maybe around 54,000 per Bitcoin. So it does go up and down. If you watch the market consistently, you'll see that it is still a little bit volatile. I think a lot of people have trouble with the volatility of Bitcoin, but as this market cap continues to increase, I think the volatility will continue to flatten over time. Are we getting away from what you planned on discussing?
No. But let me ask this: if it's based on entries in a ledger, how can it be limited? How can it be scarce? I mean, if you've got lines, and I assume it's not a hard copy ledger, it's a digital ledger, so like a spreadsheet,
Right.
then you can always add another line onto the spreadsheet. Why is it scarce and limited? Who
Yeah.
decides? Who decides?
Yeah.
Okay, that's it. And then what happens?
I believe that was all installed in the initial code. And, you know, these computers in this digital network that's set up around the world, okay, they show this proof of work with the timestamps, all right? So let's say that I want to buy a new Tesla, okay? And people may have heard that Tesla decided that they would accept Bitcoin as payment for a vehicle. So next month, I transfer 1.25 Bitcoin to Tesla in payment for, you know, delivery of a model, whatever. Okay, so a Model 3. 3 Bitcoin or Model 3?
Model 3 Tesla.
I gotcha. Okay, so let's say that we make a contract to do this, and you know the blockchain like proves that the transaction took place, and the code like stamps it with the time saying yes, this happened. Okay. And then the transaction is forever recorded in the history. The blocks are constructed like one on top of another, on top of another, on top of another. It takes like 10 minutes to prove a block that has all these transactions in it. So, you know, it like there's no point of failure for a system like this. There would be a point of failure, could be a point of failure in a system where I wrote a check and put it in the mail and sent it to Tesla, and then they had to drive the car to me. There could be a number of points of failure in something along those lines. This way, the transaction happens. It happens within about 10 minutes time, you know, and there's a proof of work that somebody can go online and verify. You know, it's just a simpler system, in my opinion.
Okay, so let's say that Tesla has decided, and you bring up a good analogy because you know I love Tesla. So this makes it very concrete for me.
Yeah.
I don't know about the others, but it does for me. Okay, so Tesla has decided that a Model 3 is going to cost $39,000.
Okay.
And then I'm assuming they translate that into German marks and all the different currencies when they sell it in these other countries.
Okay.
So, and Bitcoin varies in price. It's sort of like gold that varies in price. Is it considered a commodity, Bitcoin?
No.
Okay. Whereas gold, silver are commodities. So and that's because I assume it doesn't have mass. So anyway, so does Tesla then translate at the moment of the transaction? They say, okay, just like they do with other currencies,
Yep.
that $39,000 is at this moment 61,000 Bitcoin. no, or
Yeah.
whatever,
Yeah.
it doesn't matter. And then you have to come up with that much Bitcoin. You transfer that much Bitcoin to Tesla, and then they confirm the purchase, and you get your Tesla whenever you get it.
That is
So,
exactly.
so
Yeah.
it's operating like converting currency.
hmm Yeah,
Okay.
it is exactly like converting currency. So if the US dollar, if the euro is worth 0.95 equals 1 US dollar, they would do that translation in the exchange as well, or Tesla would complete that translation, or the equivalent of the dollar to the euro, or the British pound, whatever, and charge appropriately if you were paying in those currencies. It's the same thing with Bitcoin.
Okay. So as I'm hearing about Bitcoin, there's this positive glow around it. And there's a lot of optimism because of what it can do. Um, and I don't really understand a lot of it. It's about decentralization. So, and for some, it's a holy grail. I mean, it's not worship, but there's some bowing going on. So help us understand this elation, and where it comes from and why and what it can do in a positive sense.
Yeah, well, Bitcoin in some respects can level the playing field for those around the world who do not have access to banking, for one. Here in the Western world, the majority of people do have a bank account. We have access to um, insurance policies and transferring of funds from one account to another, and all the conveniences of being able to bank ourselves. Um, there are actually billions of people, maybe half of the world's population, that live in rural villages in, Afghanistan and India and, the Far East, African nations, also some Central and South American nations. They just don't have access to banks and the wealth that a modern monetary system can offer. And Mark, if any of your listeners or you yourself are interested, if you go to YouTube and Google TEDx, I'm sure you're familiar, and many people out there have listened to a number of TEDx talks. Just Google TEDx and Google Bitcoin or decentralization. You can probably find quite a few hours of talks from really, really intelligent people about the way blockchain and Bitcoin and decentralization is changing the world in a very social justice sort of way. I was listening to one recently that talked about a gentleman here in the US. He had immigrated to the US, and he sent funds back to his mother. I'm not sure where the country was, maybe Malaysia or somewhere. And every month or every week, he would go to the Western Union and wire funds to his mother. Well, his mother had to, spend a half a day traveling down the road to the nearest Western Union. It would take a couple hours there and a couple hours back. And Western Union actually, you had to show proof of who you were, and it was a big kind of sort of practice. There were fees involved on both ends of this transaction. So really, when you think about the capability of having a digital currency wallet that all you have to do is type in a series of numbers and hit send, and instantly there is a deposit in his mother's account. So you don't have to go through those types of situations. Now, the question that probably comes to mind is, what about internet access? And what about a device that has a digital wallet on that? Well, there's villages that have one point of access for internet and one device. And each one of the citizens within that village has their own account just set up on that one device. So they do have access to it, and they can pay for their goods and services in the same manner as they're receiving money from their friends or family that's sending them, that have come to a modern world to work and support their loved ones in that way. So, I mean, it's really a leveling the playing field around the world to the way that money and the transfer of funds can take place. It is a utopia in a way. It's a utopian vision. And I've heard someone I follow has often said the phrase, you don't change Bitcoin, Bitcoin changes you. And I truly believe it. I think that the projects that I am seeing, the projects that I'm following, are creating a new and improved way for us to think about value and the store of it and the transactional monetary systems that we have in place in the world.
Okay, I should have written down some of these questions, but I've got a lot of them, and they're rooted in some skepticism. So I'm going to push back a little bit, do some what ifs. So, but first, is there a transaction fee associated with the buying and or selling of Bitcoin, and who gets it?
Yeah. So there are some transaction fees in certain instances, and it could be because the platform that you are using to make this exchange of value happen. Okay, but through the Bitcoin network itself, that's not the origination of the fee. So there's nobody who owns the network. There's nobody getting rich by owning the network. There are people who or companies who own a platform that makes the onboarding and offboarding of US dollars and other currencies easy, and exchanges from one cryptocurrency to another. So those companies do require a fee in order to create the platform, support the platform, have people who are coding and inventing and using and servicing the platform. Does that answer your question?
Mm-hmm. And is the fee a percentage of the value of the transaction?
Yeah, that can be definitely a way that they charge for it. I mean, each independent business or company that supports a platform or owns a platform, they have different ways of collecting their fee. So, it just kind of depends on what platform you're using.
So they're acting sort of like a brokerage, a stock brokerage. They're getting
Yep.
a percentage. Maybe they're getting a transaction fee for each transaction.
Yes.
So I'm reminded of every media, every type of media that comes along and says, we're going to have very low fees, cable companies. Uh, Netflix is still just a basic fee. Um, Pandora, oh, we're ad free. We're always going to be ad free until we're not anymore.
Mhm.
but cable companies, we're not going to have any commercials. That's how cable is different. I'm showing my age here.
Mhm.
You can either watch all these ads or you can be ad free with a cable. So now we pay a subscription and we watch ads, probably just as many as otherwise. So along come these transaction providers, and oh, this we're in utopia. They're going to be very small, but then um, they start charging more, and but then there's competition, so that'll drive down some fees. But
Mhm.
then don't we end up with the smartest, the biggest transaction companies, and then we start limiting access because I can only afford ABC company, I can't afford GHI company. So then does the whole thing start to consolidate again, get more expensive, and happen just like the our banking system evolved? So,
Sure. Yeah. Yeah.
and
I mean,
it's
I
does it
understand where you're
depend on
coming
the
from.
does it depend on the utopia, maintaining utopia to keep it low cost, access to everybody, etc.?
Yeah. Yeah. I do. I understand where you're coming from with that. Um, it's a whole different way of looking at the transfer of funds because um, right now, if you wanted to send let's say you took out your phone and you wanted to send me 0.00001 Bitcoin, okay? Um,
You can do it on PayPal now too.
you
They
can,
do it.
you can,
Go
you
ahead.
can do it on PayPal. Um, uh, so let's say that I wasn't here in the US. Let's say I was standing in the middle of, I don't know, France right now. And, the transaction would happen in the exact same way that it would happen if we were in the same city or standing in the same room. Okay. So that is a huge problem solved. Now, is there going to be some sort of expense based on the support of the network that allows it to do that? Yeah, I think there is going to be. Is there going to be competition? Yeah, there's going to be competition. Um, is it a better system than what we've got in place now? I believe, and I have to believe to the core of who I am, that there is. You know, we come into this place of what sort of federal regulation um, is going to be in place, and not just in the U.S., but in Mexico and in Canada and in China and countries all over the earth. When you transfer in Bitcoin, whether I'm standing in China or France or Mexico or any of those countries, I'm receiving Bitcoin. It doesn't have to go through, the exchange rate for the Mexican peso or, the yen, whatever currency you're trading in. So it really just kind of makes the world a smaller place, and that leads into the utopia that I'm talking about. Now, I have heard, and again, I am not an expert here, and I'm not trying to defend any of these things, but there are a number of other blockchain um, applications or systems, other blockchains that have lower fees than Bitcoin does. And I think that's led to this whole people seeing Bitcoin more as a store of value instead of a transactional type of currency or type of money. It just doesn't seem right at this point in time that somebody's going to walk into a local coffee shop and spend their Bitcoin on a cup of coffee when there's a lot of other utility tokens that are available, Litecoin being one of them, also available on PayPal. Those applications are built more to scale for doing monetary transactions. And that's why I think Bitcoin has moved to a place where it's more of a, like a gold, like a reserve, like a store of value that somebody might look at if you have a portfolio of stocks, or that includes maybe some hard assets like gold and silver and bonds and all of those things. I think that Bitcoin will be and is going to move into, if it hasn't already, and will continue to move into more of that hard asset class that you were asking about earlier.
We are hearing some other types of digital currencies. Doge, DOGE coin, and Elon Musk, whenever he links his star to it, it seems to go up tremendously.
Yeah.
And Bitcoin too. And he made a lot of money. They made a lot of money in this past quarter from investing in Bitcoin. So if the purpose is to create a new central, it's almost like a one world currency. If you've got one who becomes the standard, and I think about, again, I'm dating myself, Sony and Betamax, and I think all of these different companies and cryptocurrencies look like they're vying for first place and most favored currency status. But if all of these, let's say they specialize, one specializes in oil markets, and I don't know, still don't know enough about it to know, but if they specialize, which it sounds like is what's happening, then that's decentralized, and there's some value there for proponents, but also there's some, then you have to have an exchange rate between Doge, I'm massacring the name, Doge coins and Bitcoin. So, okay, they're now trading at blah, blah, blah. It sounds like it could just be a new system rather than national monetary systems that are competing and rising and falling relative to each other. It's a bunch of those that, and maybe, Dogecoin is preeminent in Brazil and Bitcoin is mainly in the US, so then it could just parallel.
Yeah.
You want to comment on that? And I've got one, I know we need to start wrapping up here, but I've got one item that I really need to bring up.
Okay.
So go ahead.
Yeah, so I think you're right in the fact that we're seeing a lot of specialization for certain projects. I think about it like this. A project that has viability and staying power must have some certain qualities in and of itself. Like, it has to solve for a problem, just something that's coming to mind is like Filecoin. It is a system for smart contracts. And my husband was talking about another project, Orchid, which is a system for, now I can't remember. Anyway, each one of these projects brings to the table a solution to a problem that a blockchain application, a blockchain group of code can solve for. So those with staying power will be relevant because people will see them as a way to remedy or improve upon a process. So they have, it has to be a viable project for one. And I hope that kind of spoke to your question that you're talking about. Each one of the different, cryptocurrency is one thing, and there is decentralized financial applications and projects made for financial purposes, but there's a lot of coins out there that are representative of projects that are more utility, and they are solving business problems and offering solutions for the way business is trending and changing from our current system.
One thing that popped into my mind, and I hope we can continue this conversation because we certainly haven't gotten to the full bottom of it, but I think one thing that could be interesting is in a later podcast, for us to do a transaction in one of these, with one of these providers and show, okay, here's how I'm going in, and here's how I'm buying it. I'm transferring it to you, and you're receiving it, and we can both show our screen and show that actually happening.
I'm
Probably
getting
seems
for that, Mark.
in 10 years it'll look pretty elementary. It's like me handing you a dollar bill. Oh, look at this. We're showing, here I am. But anyway, so I do have one more before the big kahuna question. And I heard some podcasters talking about Bitcoin, Tesla possibly mining Bitcoin. So how do you do that? How can somebody mine Bitcoin? It sounds like they're creating the asset.
Yeah. So they basically are creating the asset. So what I understand of mining Bitcoin, and I'm surprised about one thing here, and I'll just make a statement, Mark. I truly thought, because I understand your ideology, at least some of it, and in your status on energy and the ecological impacts of using as much energy as, and that seems to be a common sort of rebuttal or refutation of Bitcoin as the amount of energy that it uses to produce. Okay. So when you think about, but to answer your question specifically, how do you mine Bitcoin? You have to have some hardware, some computer hardware. They have Bitcoin farms. It can be anything from one machine to multiple machines that are connected together. When a transaction is sent up into the blockchain, this connected network of computers around the world work to do this sort of proof of transaction. It's like proof of stake. It's called the hash rate. It's the rate at which they can prove this transaction happened and put it like tidied up into the block, okay, to create the block. So really, if Tesla wants to mine block or Bitcoin, all they have to do is set up some machines, hook them to the Bitcoin network, and start the code running, and it will participate in the settlement of these blocks and start earning Bitcoin through their hash rate or through their proof of work that they're completing the process through. Does that make sense?
So they're not making Bitcoin, they are adding. Say it again.
Yeah, so they're adding hash rate to the network. Basically, they're lending their computer power to the Bitcoin network to prove the transactions and lock them into the chain. So it's really kind of more of a reward, if you want to think about it, for being part of the blockchain network. And because it takes a lot of energy and it takes hardware and investment and coding and some maintenance of these systems. Their reward, they're getting paid in Bitcoin for doing this proof of work. They're getting paid for their work, basically.
Okay. Let's dig into that more next time, because I think it warrants further discussion. But let me hit you with the big concern, and I think it's there for a lot of skeptics, and it probably should be there for a lot of advocates, and that is security. Um, and I think I've done a lot of reading and observing um, videos of Edward Snowden, and I think that the main takeaway I came away with was there is no such thing as security. There is no security, and that the government can get into it. They can make Apple give them certain things. Um, we've seen this huge hacking, Solar Winds or whatever and Microsoft, huge hack of government agencies and businesses. And the general response I hear is, oh, because this is in the cloud and nobody controls it, that it's just 100% secure. Nobody can hack it, which probably is the siren song for any hacker. They've all got to be drooling. So how can it be 100% secure, no questions asked, no hack? Nobody's going to hack this thing. No government. Um, there's this big source. It's this big pot of gold that's going to be growing until 2041, but nobody's going to come after it, and nobody's going to hack it and damage it.
Yeah. So that's 2140, the year, and
Okay.
not a big, only 100 year. So, I don't think anyone that I've listened to has claimed 100% incapable of being hacked. I don't think that's 99.9999. Yeah, maybe, but not 100%. And from what I understand, and again, I'm not a high tech person, but the argument and the defense case is that the way the blockchain is constructed, this proof of work that they do, that when a block is proved, then it's locked into place, and the next block is proved and it's locked into place, locking each subsequent block behind it into place, into place, into place. In order to make any sort of change to what's happening, you almost have to go back to the very beginning and change every single block in the blockchain. And that's what creates the security. And yes, everything is out there and open sourced and in the public and can be found and see the proof of work. But because of the construction of the blocks, it is infinitely more secure than our current Internet of Things that we use.
That makes sense. And the analogy that popped into my head was it's like a giant Minecraft game with each of whatever the blocks are linked to the first one, and you can't pull one of the Minecraft blocks out without pulling all of them up.
Yep. That's exactly the defense and the explanation for what makes blockchain infinitely more secure than our current internet system.
Let's hit the pause button here in a moment, but I would love to continue the conversation. I think there's a lot more to be discussed and to be understood, and doing that transaction could be fun. Um, and I just think there's a lot more here, and it's one of the more complex concepts that I try to get my brain around. And I will say I have a little I need to I have a little disorientation. My brain has really worked hard to try to understand this. So, and also when we talk again, you have such a passion for it, and it's part of that utopian ideal. Um, and so I want to hear next time what it is that's grabbing you in the gut
Mhm.
about this,
Yeah.
and enthuses you so much about it. So let's be sure to talk about all those things. Um, so I really appreciate you doing this. Um, Hopefully, you saw my pushback as gentle and compassionate, because I certainly wanted to do that. But I think there's so many things to understand that hopefully it's helpful for the listeners.
Yeah.
Um,
Well, it's a big topic, and like we just barely scratched the surface. And yeah, there's so many more ideas and so many things else I would like to share and encourage people to look into or consider. So I would enjoy the opportunity to speak again.
Do you want to recommend a couple of sources? Oh, some feedback there. A couple of sources, um, or people that are authorities. I think you mentioned Michael Saylor beforehand. Who who do you really like to listen to, and who gives a good, clear explanations of this if people want to dig deeper?
Yeah. So Max Kaiser is he has the Max Kaiser report. He's been a Bitcoin enthusiast for many, many years. That might be a good resource for people. As far as news goes, I listen to a guest creator, Digital Asset News on YouTube. You can find him there under Digital Asset News. His name's Rob. He speaks. He comes from a fairly conservative view, so it's not somebody out there trying to persuade you to, put all your hard-earned money into Bitcoin or any sort of cryptocurrency. So those would be two big ones that would be worthwhile for checking out for individuals who want to learn a little bit more.
Great. And if you would send those and any others that you think about subsequently to Libby, she'll post those in the show notes, and and people can look them up. So with that, let me thank you again. I really appreciate your time, and let me remind people that they can look us up on. They probably found us on YouTube,
Yep.
um, and we're on all the major podcast networks, audio podcast networks. So wherever you like to listen to podcasts, we're there. Please do visit our website at thrivecolivingcommunities.org. We're now uh, members of Patreon. So if you'd like to support the channel, Patreon is a great way to do that, and to support the Thrive Co-Living Communities. I won't go into what we're doing here, but and there are also some other ways. GoFundMe campaign, Amazon Smile donates a portion of their proceeds, and you can find all those ways in the show notes and also a link to the website. So thanks again, and I'll look forward to our next session to talk more about this and blockchain technology in a broader sense. So I'll really look forward to that. And everybody tune in, and you'll see us actually pass some money. I can't tell you if it's going to be a lot, but we'll pass some money, maybe back and forth to with Bitcoin. All right.
Great.
Thanks everybody.
Thank you. Thank you. Bye bye.
Thanks for joining us for another great episode of the Thrive Co-Living Communities YouTube podcast. To learn more about our mission and how you can support our vision of creating co-living communities worldwide, please visit us at thrivecolivingcommunities.org. To receive advanced viewings of our podcast and other exclusive content, find us on Patreon at patreon.com amazon.com/Thrive Co-Living Communities. You can also learn more ways to support our mission in the show notes below. Amazon Smile, GoFundMe, Kroger, and our own Thrive Gear store, where you can buy t-shirts, hats, and many other items. Thanks again for tuning in, and we'll look forward to seeing you again soon.